Welcome everyone to our daily Forex market analysis call, and this is in preparation for trading on August 31st, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially now that we are into a last little bit of summer trading here. And if you have questions about your individual investment needs, I recommend you talk to your investment advisor. So as always, we will start off by taking a look at our calendar. Today, the big thing was that we had positive non-farm employment number, ADP non-farm employment numbers that came out. So these are usually the precursor to the non-farm payroll numbers on Friday. And we also have positive Canadian data, although that didn't really help the Canadian dollar much because of everything else that's going on in the market. So coming up in the session here, we have Chinese manufacturing and non-manufacturing PMI data. We have business confidence number for New Zealand, as well as private capital expenditure for Australian dollar. So anytime Chinese data comes out, it is important for New Zealand and Australian dollar, and keep taking that into account with the Australian and New Zealand dollar data that comes out. If this data comes out negative, that will be even worse for Australian and New Zealand dollar. So right now what's going on in the markets is that we have Hurricane Harvey going on in the US, and as a result of that, we have oil that has actually dropped, and gas prices have gone up. So the reason behind that is because there are a lot of pipelines that will transport the oil from Canada and different parts into the refineries in Texas, and that's where it then gets refined and turned into gas. So the problem that's going on for Canada right now is that because of that, the pipelines, the refineries are they are disrupted, so they're shut down. They have been damaged. Some of them have been damaged. As a result of that, we have an oversupply of oil right now. So oil production hasn't been reduced, but the refineries are not working like they were at capacity right now. So as a result of that, it's creating a glut of oil. And that's why the oil price is dropping, even though gas price is going up at the gas stations, oil price is dropping, and oil is heavily tied into Canadian dollars. So if oil prices drop, Canadian dollar will drop, which means dollar CAD will go up. And tied into that are other commodity currencies, Australian dollar and New Zealand dollar. So that's why we saw both of those come down. And for the last couple of days, we have seen dollar CAD go up. So dollar CAD is going up even further now because of these concerns. Excuse me. So just keep that in mind. And as a result of that, any negative numbers that come out for these countries, that will be negative for the currencies there as well. So coming up on Thursday here, we have excuse me, we have some CPI numbers out of the Eurozone, and then retail sales numbers for Germany there. In the New York session, we have unemployment claims and Canadian GDP numbers, personal spending, pending home sales will be important, PMI numbers are important. So just a bunch of data. So Friday is the most important day where we have non-farm numbers coming out. So that will be the most critical number, but these are, some of these numbers are very important as well. So even though they are not red news, but they are still important numbers. So right now we are seeing that the US dollar is back on top again. Part of it is, excuse me, sorry, just the month-end trading. So hedge funds usually, or big traders, will close their positions out in order to book a profit, which means it will go in the opposite direction. Part of it is tied with what's going on right now, and plus the positive data that we have recently seen out of the US. So US dollar is gaining some strength back again. So let's go on to the charts here. Let's see what we have going on. Let's start off with our Euro US dollar. So yesterday we had seen a big daily pin bar. When we get daily pin bars, we're looking for a move to the downside. So we did get that big move to the downside, big engulfing candle. We are into our this range that Euro had traded in quite some time. So nice engulfing candle. As a result of this, we will look for a further move to the downside. So here what we are looking for is price to go higher into 1.1915 or 20 level, and then looking for a further drop. So Euro is bearish at the moment. So we will look for a follow through in this. So the target for this will be right into there. So 1.1820 will be the target to the downside. But first we are looking for a bit of a move to the upside here. So we're looking for price to go into this level. So we just look a little bit closer. So this is our support and resistance level right into here, which ties up into our pivot point. So we're looking for price to go up and then drop back down into 1.1820. So overall, we are bearish on the Euro here. Okay, moving on to the British pound here. Excuse me. So British pound here, we see a bullish pin bar. So in this case, just remember that we are into resistance here, 1.2950 level. So there are a couple of different scenarios that we could look at. If the price stays below this level, 129.50, then we are likely to see the price drop. However, because it is a bullish signal, bullish pin bar is a bullish signal. So if it does cross this level, 129.50, so this is an important level. Price had a lot of trouble trying to break through it the first time around. So now if it does break through it, this is the target we are looking for, 129.80. So first hurdle to cross will be 129.50-ish level, the 40-ish level, and then we're looking at 129.80 as the next target to the upside. So based on the daily candle close, this is bullish, but just keep in mind this is our resistance. So that will be the level I would be keeping an eye on. So if the price stays below that, excuse me, if the price stays below this 129.40 level, then it would be fine. We're likely to see a continuation to the downside. This is our target, 128.40, or even slightly lower here into this support and resistance, which is a 128.30 level, ties in with our S3 level. So that's what we're looking at this point. So this one I would be careful about because we do have a bullish signal, but we are into resistance. Aussie here. Aussie took a hit today. We saw that the price based on yesterday, we were looking for price to move higher. It did go higher into the next support and resistance level at 79.92, and then it has dropped. So based on the candle close here, this is quite a bearish engulfing candle. So we're looking for price to move lower. And in case of in terms of a pullback, this looks like a good level for pullback, 79.38 level. So what we could see for this one will be price goes up, pushes into this level here, and then rejects the level to move back lower. So in this case, the first target will be this level, this support and resistance level right over here, and then below that will be 7,800 level. So let's just draw a line. Here we go. So this will be our first target, 7870-ish level, and then we're looking for 7800 as the next target once this breaks down. So overall, the daily outlook is bearish. New Zealand dollar here, this is quite bearish as well. Yesterday we had a bit of a neutral kind of close. Today we are bearish. It has broken down this support and resistance level. We are back into support here as well. But at this point, we are looking at price. The pullback level that we are looking for is 72.29 here, this level. So this is the move that we are likely to see. So we're looking for price to move down lower. So just to keep in mind, both Australian dollar as well as excuse me, New Zealand dollar have news coming out as well as Chinese news coming out. If, let's say, all those news items come out negative, we are likely to see a drop in both Australian dollar and New Zealand dollar. But overall, this is bearish, so I'm looking for a further move to the downside into 71.20 level. Dollar CAD here. Dollar CAD, like we just talked about, is quite bullish. So this is the level that we had tracked for a bit. It has broken above that level. And now this is a really big bullish candle close. So we're looking for further move to the upside. It's close below this above this 2600 level. So the next target we are looking at would be, so we could get a pullback into 2600 or even this. Let's see, where are we? So 2580-ish level will be the pullback level to watch out for. So the next target, the first target here will be 2680, and beyond that we are looking at 2750 level. So overall though, this looks bullish. And here we are, as we can see, price has broken through this level. So now we could get a pullback into 2590 or 80-ish level, and then a further move to the upside. So very bullish. Euro, Swiss franc here, this looks bullish. It has made higher low and higher high, and it has closed higher. So this looks bullish at the moment. So we're looking for price to continue further for this. So we're basically heading back into the top of the range. So it has stayed in this range since the beginning of August. It went and did a double bottom, and now it's steadily moving higher. It's not quite the nice even move that we saw over here or even over here. It's just there's a lot of pins and stuff, and that is a reflection of the current market conditions. So when I say market is volatile, this is what I mean, because this is not the type of trading we see under normal market conditions. Only during times of maybe when there's risk in the market, or also when there are holidays. So there isn't a real reason for prices to really move anywhere. So this is the kind of trading we see where price will go one way and then it goes the other way, come down all the way, then closes all the way up higher. So this is what I mean when I talk about volatile trading. There's no real true trend in the market. So if you look even here, so we see that the price is steadily moving up towards up higher, which is good. Here we can see very clearly that price is very, very bullish. The candles here, they're getting bigger. Each candle is getting bigger. They are nice and strong candles, whereas these ones, they're not strong candles. We have wicks on both sides, small candle body, big rejections all over the place. So those are not good signs of a very steady trend. It just means that market is back and forth. And under these market conditions, it's easy to get chopped out of a trade because when you place a stop, it could get hit and then it could turn around and go in that direction. But the problem is it will get too far before it turns around. So that's why we have to watch out. But overall, though, since the price has closed above this level and now it's closing higher, plus it's making higher highs and higher lows. So this is bullish. So the next target here will be this right here, which is 1.4780 level. So we're looking for this as the first target, 1.1480 level. Then we're looking for 1.1520. So basically we're looking for price to kind of continue moving towards the top of the range. So this is bullish. Pound Swiss here. Pound Swiss has been very bullish. It closed above the high here. So this is where the market, so safe haven currencies usually tend to strengthen when there's risk in the market. Right now, even though North Korea is kind of sending out missiles. So the problem that's going on right now with North Korea is that US and South Korea are running some drills in South Korea with the weapons drills, and North Korea doesn't like that. The reason they started doing that was because of the danger from North Korea, because North Korea was testing all these missiles. So they started excuse me, some training exercises in South Korea, and North Korea does not like that, so they are now showing force, or use force. So they sent a missile over Japan. It did not. It just detonated over the water, just kind of self-destroyed itself. So it did not really impact anyone, but it was a clear threat that basically North Korea saying that, well, we can do this, we have control over this. So the response from US hasn't been as strong as it normally is from President Trump, but he has sort of come out and made a couple of comments on Twitter and so forth. But right now the markets, the first time when these things first started, market was really, really concerned about it. But right now the market does not seem as concerned, and that is not normal. So there are a lot of things that are going on that are not quite the way things are. So that's why just be very, very careful with the trading. Things are a little bit out of whack. So yesterday here we were looking at a big bullish pin bar here because price had come all the way and rejected this. So I was of the opinion that market will adjust to the risk, but one thing to remember is market can stay irrational a lot longer than we can stay solvent. This is a saying that I learned a long time ago through a hard lesson. So I will say that that's why it's important to keep the trade sizes really, really small, because it is quite easy to take losses under these kind of market conditions. So now, based on this big bullish candle close, we are back above these previous highs here. So this looks very bullish, unless something changes in the market and markets thinks that risk is back in the market and they want to be risk averse. For now, though, this is very bullish. So we're looking for price to move up higher. Excuse me. So in this case, we may see a pullback into this level, which is 1.2420-ish level. It could pull lower. The pullback could be lower. So let's take a look at this level. Yeah, so this is a good level, which is 1.2394 level. So 1.2400 level. So the type of move we may see could be one of these. Price pulls back and then makes another leg to the upside. So overall, though, daily candle is very, very bullish, and we are looking for further move to the upside. But first, we could get a pullback and then a further move to the upside. The next target here will be this one. So about 2520 level will be the next target to the upside, which is this previous support and resistance level. So overall, I'm looking for price to go up, but before it goes up, it could pull back and then go up. So bullish on pound Swiss. Dollar Swiss, the same story. Over the last 2 days, things have been very crazy. Big bullish candle close, and now we have follow through to the upside. So we are looking for a further move to the upside. So in this case, we are looking for the next target would be 96.99, so about 0.9700. So I'm looking for price to move up further. Same story, we could see a pullback before it goes up further, and the pullback could come too. So it's not necessary that we'll get a pullback, but it's always good to look for them because it just makes our stops a bit smaller than they need to be. So this is the first one. Price is price looks like price did touch that already. So 96.14 level, and if it does a deeper pullback, we're looking at this level here, which is 95.89 level. So let's say 95.80 level. So those are the two pullback levels. If it just holds above that level, we are looking for a further move to the upside. 9,700 is the target. Pound yen, same story. Both yen and Swiss franc, both of them are safe haven currencies that tend to move in similar ways here. excuse me, very bullish candle close. Yesterday we had a big pin bar, bullish pin bar, follow through. Now we're looking for a further move to the upside. The risk aversion that I was expecting in the market has not shown up. So this is bullish as it gets right now. So the target here is 143.20 level to the upside. So this is the support and resistance we're looking for. Just looking for a move to the upside. So here's our euro yen. Euro yen is interesting. So euro has dropped. We are into resistance here. So price is testing that same level again. It may go up a little bit higher into this. So excuse me, 131.50-ish level will be the level that price would have to hold above for it to really be bullish at this level. We did get a bullish pin bar here, but we talked about how this was into resistance. So price has pulled back, not a huge pullback, but it is a rejection nonetheless. So if euro moves down further, we could see pressure on this one. But for now, it is looking bullish, but again, it is into resistance. So in this case, if the euro drops, the move that we're looking for is price goes into resistance here, 131.50, and then drop. So 129.50 will be the target for the drop. But if it does break through 131.50, then we are very likely to see a further move to the upside. So we need to step back a bit. And let's see what's the next level is right about there, 132.50. So that will be the next level we will be targeting right over there. But first, we need to see the price break through 131.50 and hold on the other side. If it does that, then we are going to be bullish. So the reason why this one is bullish, excuse me, even though we have a candle close like this, is because price is still holding above the previous highs. So we're not just looking for the most immediate high, we're looking for the previous high, which is this one. So we're looking for the next high. So in this case, as long as price holds above this level here, as we can see, this is an important support and resistance level. As long as price holds above this, this is bullish. And once it crosses to the other side of 131.50 level, then we are looking for 132.50. However, if for whatever reason euro is weak and we see the price drop, then we're looking for price to come back to 139.50. So essentially in this case, the trade will come either after the breakout of 131.50 or after the price breaks through this 130.88 level, because then once the price breaks through, we're looking for continuation to the downside. Aussie yen, just like everything else, Aussie yen is pushing up right now. So in this case, it is into previous support and resistance from base just purely on the technicals here. Excuse me. This is a bearish pin bar. So as a result of this, we will be looking for a move to the downside. Now, we do have news coming out for Aussie. And one of the things that's happening here as well is it's still holding above the previous close here. So this still maintains some of that bullishness here. See how price is holding above this previous close. Same way Aussie here as well, price is holding it close below the previous close here. So it still has that upward momentum to it, but it is slowing down. This is a rejection. So if Aussie drops today, Aussie yen is likely to follow as well. However, if the yen crosses are move up, all of them move up, then Aussie yen would likely follow. It may just not be as strong as some of the other pairs. So again, in this case as well, 87.50-ish level will be an important place to keep an eye on. If it breaks to the other side, then we are certainly looking for price to move up higher, even though it is a bearish pin bar. In that case, our pin bar excuse me, our bearish pin bar will fail. Otherwise, we could see price come into this 87.50 level, reject this level, and then drop. So the first target would be 86.90. The second target to the downside here. So from just purely from technical perspective, this is a pin bar. So we will look for bearish pin bar. So we will look for a price move to the downside. 86.60-ish area will be the target to the downside. But if it does cross to the other side, 87.50, then we're looking for next one here, a retest of this, the previous high. Excuse me. Okay, so dollar yen, very, very bullish here, bullish pin bar, bullish continuation. Like I said, the risk that I was expecting in the market, the risk aversion that I was expecting the market, it has not uh, panned out. So right now we have a follow through to the bullish side. So we're looking for further move to the upside here. The target would be 110.90 level, basically this back into the support and resistance level. So this is bullish as well. Euro pound here, big drop. We were pushing into this key support and resistance that we haven't been in quite some time. So last time we were here was back in September 2008 and 2009. So some major resistance level there. So we're back into this level. Price has reacted off of that level. We saw a pin bar, and then now we have seen a bearish follow through. Now we're looking for a further move to the downside here. We could get a pullback into 92.30 level. So the move that we could see would look something like this. Price pushes up and then drops. So in this case, the target that we are going to look at will be this one here, 91.40-ish level. So let's say 91.50. So we're looking for price to move lower, but it could push up first, do that pullback, and then do a drop. So 92.30 will be approximately the level that I'd be keeping an eye on to take a trade short, and then target would be 91.50-ish level to the downside. Euro Aussie. Euro Aussie here, we had a pin bar, and then we have seen a drop. This is holding below this resistance level, 150.80 level. So right now we're expecting a lower, a move lower. Now, again, there's data coming out that will have an impact on this. So keep that in mind because Aussie could weaken further. If Aussie weakens further, it could break through that resistance. But for now, as the technicals sit, this is a very neutral candle close. We have small body and pins on both sides. That's neutral. But in terms of our resistance, that is still intact at 150.80 level. So because it is holding below this resistance and we have a very neutral candle, we will look for a further move to the downside. But if it does break that 150.80 level, then we could see the price go and test the high. So, but our main case is not the breakout. The main case is a follow through on this bearishness. So we are looking for further move to the downside. And the first target here would be 149.80, and the second target here is 149.30 level to the downside. So that we are bearish on this. All right, any questions or anything to add? Okay, so I think that's it. So we will call it a wrap.